Well, we're most certainly seeing a market which is still trying to work out whether we are heading for a deeper economic slowdown than what we were worried about earlier this year, and how that will impact the raw materials. But at the same time, we're seeing the stimulus now being stepped up in China. We're seeing the first rate cut in the US. We're seeing rate cuts coming in Europe as well with the economic weakness we're seeing here. And then on top of that, all the geopolitical risks in the Middle East. So basically, it's a very volatile market right now where we see some winners and we see some losers. Some of the winners are especially the metal space, both precious and industrials. And at the other end of the scale, the energy market has been somewhat under pressure recently. Well, it has so far. The question whether this bazooka is big enough really to move the needle. So far, the market has responded very positively. We saw a very big rally in the Chinese stock market last week. But the question is really whether it changes the fundamental problems they have with the demographics, with the property sector that is probably too big for at this point in time, where there's a lot of unsold housing. So we'll see. But again, in the markets, there are signs of optimism that at least now they're stepping up, trying to defend the growth targets that they have. So we stay quite optimistic on the outlook for especially some of the key metals. We have to remember industrial metals derives around half of the total global demand from China. So it is a very important player. Well, we can't talk oil price without talking China as well, because what we've seen in the last year is this economic slowdown, which is now trying to hold. But crude demand in China has fallen, or the growth in demand has been much less than expected this year. We're seeing a very big, fast rollout towards electrical vehicles, to hybrid cars, which means that gasoline and diesel demand looks like it's almost peaking this year in China. So that has left the overall global demand outlook quite sluggish. We have non-OPEC plus producers increasing production, and we have OPEC plus trying to keep production down in order to keep prices up. And on top of that, all the geopolitical risk that's also, especially right now, is being seen in the market. But generally, the oil market is reflecting sluggish economic or sluggish demand driven by an economic outlook that doesn't look too strong at this point. Well, unfortunately, when we look at the gold price, it's been rising, as you say, very, very strongly, and it's really a reflection of an uncertain world. There are multiple uncertainties right now. We have a massive amount of debt, which is making some investors worried. We see that in the US. We have a US presidential election, also very uncertain, where both candidates probably going to spend a lot of money that they don't have, so they need to borrow it. That's raising some risk. We have the geopolitical side of it. We have wars. We have the potential trade war with China. We have central banks changing their portfolios or changing their reserves away from the dollar towards gold. So overall, basically a reflection of an uncertain world. And the big question is, how long will this rally continue? I think it will continue as long as these uncertainties remain unsolved. And that's what we'll see in the foreseeable future. So with that in mind, I still see gold and silver prices move higher in 2025. I think the precious metals remains a sector where investors are increasingly becoming aware. We see a good outlook for gold and for silver. If you look at the industrial metals, we can't avoid not talking about Dr. Copper. There is a lot of expansion right now taking place when it comes to the electrification of the world. There's no doubt it will require a lot of copper in the coming years. Mining companies are struggling with higher costs and lower ore grades, and basically meaning that we potentially could see tightening supply in the coming years. So I like copper as well. Then unfortunately, I think the agricultural sector is a bit mixed. We've seen some very, very high prices this year in coffee, cocoa, and to a certain extent also sugar, whereas wheat, corn, and soybeans has been better behaved. But we are seeing some signs that there are drought hints to the winter period, which may raise concerns about the outlook for next year. So even though I don't want to recommend or talk about higher food prices, but I think there is a risk that we could see higher prices on some of these key crops next year after two very good years where prices have been relatively low.